Permanent job losses are on the rise, and hiring in the U.S. continues to slow, but the unemployment rate is back in the single digits for the first time since the start of the pandemic. The latest jobs report shows the country added 1.4 million jobs in August. That is the smallest number since mass hiring resumed in May. Permanent job losses also rose to 3.4 million last month, the highest since 2013. So overall, the seasonally adjusted unemployment rate fell to 8.4%. The jobs added were largely driven by temporary census workers who accounted for more than 1 of every 6 jobs added last month. Mark Strassmann reports on how it's creating a divide between Wall Street and Main Street.
It's ridiculous that we have to stand in line like this.
COVID America has forced the jobless to redefine success. Forget the dream job. Find a paycheck.
I had the dream job, and because of COVID, I lost it.
Eric Beltran's a beer expert, and sure, lots of 26-year-olds believe they are. But he worked as a brewer. Beltran was furloughed in mid-March, laid off in late May. His unemployment benefits abruptly stopped. He's gone 4 weeks without 1 nickel in income.
At this point, it is just trying to find a safe job.
A paycheck?
Yeah.
How stressful is it?
I don't get that interview. I don't get the job. I don't get unemployment. It just weighs on me more and more.
Since mid-March in COVID America, more than 59 million people have filed unemployment claims. In that same time, the New York Stock Exchange has grown more than 41%, driven largely by tech stocks.
It's created big winners and big losers.
Mark Zandi, chief economist at Moody's Analytics, credits record low interest rates for rocketing stock prices. But half of Americans own no stocks.
About 1/5 of Americans are working less and getting paid less than they did before the pandemic. So that's the real result of the pandemic. The stock market is just completely disconnected from that.
Wall Street means nothing to the Main Street where Eric Beltran still looks for work.
Is the economy doing any better for you?
For me, no. Absolutely not. It's great that Apple and Tesla are flying high. Doesn't really change the fact that, I have to move in with my parents.
Mark Strassmann, CBS News, Atlanta.
Mark Hamrick is the Washington bureau chief and senior economic analyst for Bankrate, and he joins us now. Mark, let's start where Strassmann left off with the inequality within this recovery. Why is there such a disconnect between the stock market and most American workers?
Well, let's first of all, Tanya, as you know well, point out that when people are talking about the stock market, typically they're looking at the major averages. The S&P 500, by its very definition and composition, is comprised of 500 of the best capitalized, largest companies. And it is not America either per se, but it's a pretty important part of it. And so as we've seen the S&P up until yesterday chalk up new record highs, that has primarily been driven by investment in about 6 major big technology stocks. But there's no stock out there that tracks the mom and pop restaurant that's down the street that may have already closed or is struggling to survive. And so there is a disconnect. And I think there's a disconnect between the wherewithal of Americans who are able to invest in the stock market, primarily, let's remember, for retirement, and those who are not. And so America is very divided in many ways. This is one representation of that.
That's a very helpful explanation. So how concerned should we be when we dive into these job numbers that there were 2 million more permanent job losses this month than new hires, especially when we take into account that 17% of those new hires were temporary census jobs?
Well, we know that the country completes a census every decade, so this isn't a surprise to us, but the composition of the jobs being added or recovered is obviously of key concern. Those numbers are something to watch, and the deeper we get into this economic downturn, and obviously aspects of it that are going to persist, there is a continued risk of permanent job loss. At the same time, within this report, we saw that 3 million jobs that were previously thought to have been involved with temporary layoffs were restored. There's 6 million left with work yet to do. So make no mistake about it, there are sectors that are doing relatively well. For example, the airlines are not, and we know that there have been tens of thousands of furloughs and job cuts indicated to begin in October in that industry alone.
So you mentioned the airline sector not doing well. So let's dive into that a little bit more when you break down how the economy is doing by sector. Airlines are not doing well. What other areas are not doing well, and which are the ones that are doing well? Because some are doing quite well.
Well, we'll go back to Mr. Zandi's point about the beneficiaries of the Federal Reserve's decision to cut interest rates to record low levels. The stock market has been helped by that. People search for yield, and fixed income is not an area where high yield is able to find with a great deal of success or confidence. Low interest rates have fueled a bit of a housing boom here recently. That has helped home sales. In some cases, we're seeing bidding wars where people are looking to get out of densely populated urban areas or just looking for more space. Might include an apartment, or I should say a bedroom where they can convert it into a Zoom room, so to speak. So those are the low interest rate areas that are benefiting. On the other side of the equation, those that are still looking to be restored, it's pretty much those on the leading edge of job loss, leisure and hospitality, that is bars and restaurants as well as retail, and combined, those two sectors still have about 3 million jobs yet to recover from the many that were lost from earlier this year. Let's go back and remember, we lost 22 million jobs in the first 2 months of the year. We've since put back into the economy 10.6 million. That means we have 11.5 million yet to go.
Right. So what do economists see in store for the months ahead then, as Congress appears no closer to another relief bill?
I think that we learned some lessons from the last recession, that recoveries typically are long-term efforts, not something that happened with the snap of a finger. But obviously, this downturn was remarkable in its speed. And to some degree, the recent improvement has been, let's say, quicker rather than slower. But we also believe that this is going to be a long-term process. Last measure of both LA and New York had unemployment at 16% or higher. So we know that those two cities alone have much more recovery yet to go. And there are going to be people among those that lose their jobs long term. It's always harder to get back into the workforce after you've been parked looking for work for some time to come, in part because of the fact that their skills are less relevant than they were before.
Mark Hamrick, thank you so much for sharing your economic insight with us and breaking down some of these numbers. We really appreciate it.
Great to be with you. Thanks for having me.